So I was asked to talk about real estate today. I think before I do that, though, who's been in the real estate industry, let's call it more than 20 years? There you go, so have I. The reason that question is important is you've seen some stuff, right? If you've been in the game 20 years, that means you were buying before the real estate crash, right? Our first purchase, Norris Drive, as an investment property was late 2001. So we've been doing this a long time, single family home, 1818 Norris Drive. And the reason that's important is we've also seen a couple of recessions, right? We went through the beginning or the end of the dot-com, we saw the Great Recession, we saw COVID recession, we have seen some stuff. And when you're talking about the real estate industry today and what's going on, you have a lot of newbies who want to make everything look like the Great Recession. It's obviously not. The debt structure of single family homes is clearly not the same. If you don't know, here's a great trivia question for you. In 2006, the worst year for mortgage origination, what percent of mortgages originated in 2006 were adjustable rate mortgages of some ilk? Anybody want to guess?
I would guess north of 60.
It was actually 52%, which is a record. What percentage of those were the ultra toxic, now illegal neg-am loans? 12%. 12% of loans were negative amortization. If you don't know what that means is you're not even paying enough to pay the interest, they're taking the extra and slapping it on the loan. Can't do those now, they're illegal. So everybody wants to make 2024, 2023, 2022, 2021 like the Great Recession, and it's clearly not. So the other thing to think about is the economy. Do you know who drives the US economy?
Consumer.
Consumers drive the US economy. We're well over 68%, by some metrics 71%. Yes, I know the government likes to spend money. Yes, the government is spending more money than ever before, but still we drive the economy. So why is that important to understand? I've been studying the economy for 30 plus years. I have an econ degree, MBA, accountant, numbers, comfortable with math. And if you can figure out what the consumer is doing, things become predictable, right? You can kind of see the dominoes. The other thing that's interesting is, does everybody know me, one rental at a time? Or in the audience, you guys? Okay, so you know the story, right? No partners, just Olivia and I. No direct mail, none of that hard stuff. We're just we were just W-2 employees who reduced our expenses, stacked discretionary income, bought assets, and did it for 20 some odd years. It works, right? The wealth formula is easy. But I have some bad news to deliver to this VIP group. You may hear it as bad news, but when I say it, I want you to know that I hear it as good news. But here it is. The next 18 months are going to be harder than the last 2 years. Recessions are normal. They happen. In fact, I would argue they have to happen. You have to have a time where you clean out the system. We have had an ungodly amount of debt done in the last couple of years. A lot of that is going to come due, and a lot of it will be written off, reduced, foreclosed, credit cards, cars, it's going to be painful. But here's one rule that I know about any kind of investing. You make your money when you buy. You make your money when you buy on price, you make your money on terms. This is the time to get excited. If you are in the real estate space, the next 2 years will be better than the last 2 years. See how I did there? The economy is going to go through a rough patch. It's a certainty. The only thing you can argue is timing. And by timing, I'm talking months, not years, not even quarters. It's coming like a freight train. You can look at all the stats on consumers and realize that most consumers are just about tapped out. There's a lot of rich folks with money on the sidelines that will pounce and do deals, but the average consumer that drives 68 to 71% of the economy is just about tapped out. So recession's clearly coming. You can look at Starbucks, you can look at McDonald's, you can look at Lululemon, you can look at all of these other consumer-facing brands, whether you are low-income dollar store or spending $100 on yoga pants, everybody's pulling back. It's coming. Recession is coming. So, the other thing to realize, and this should hopefully make you feel good, Expansions, bull markets, the good times, whatever you want to call that, they last 8 to 12 years. The bad times, bear markets, recession, they are 8 to 24 months. This one's probably going to be on the longer end because we have a lot of sins to pay. Just do. So, realize that, but also if you're real estate investors, where there's great pain, there's great opportunity. I personally, Olivia and I, when I say I, realize it's we, because we do everything together. I suspect we will buy the largest stuff we've ever bought. Currently, that's 20 units. That's the largest thing we've bought. I suspect we will get opportunities to buy between 10 and 40 units pretty routinely. Too small for the big boys, not enough, too much for the little mom and pops, and everybody's going to be scared. The beauty that I've learned about real estate investing is the herd moves together. So we started buying in 2001. Here's a question for the audience, the folks that raise their hand, you've been doing the game. What year were most people out of the real estate game in the last 25 years? What was that year?
Was it 08?
2010. Same question. What was the best year to buy investment real estate? 2010.
That's what I was going to last.
The public is stupid. It pays to understand what they are doing and go the other fucking way. It's just how it has worked for the longest time. The other thing to realize is the wealth formula. I'm not talking income, chunk money, none of this. Wealth is very simple. And I say this as a W-2 employee. I'm not an entrepreneur. I'm not the JV creative guy. I'm just a guy who had a job, saved money, and bought assets. It's very simple. Live below your means, create disposable income, become uniquely good, what I like to call, or actually the lumberjack calls elite at something, and do it for 10 years. It's that simple. So what does elite mean in my context? So I've already heard the word mentioned a couple of times today. I use a word called buy box. So we live in the Silicon Valley. We wasted a year looking there. It didn't work. We ultimately find Fresno, California. Out of area. Not out of state, but out of area. 2.5 hours away. That's 1 million people. Never lived there, didn't know anyone, all of that. How did we do it? Our buy box was this simple. 93703, single family homes, 3 or 4 bedrooms, 2 baths, 2-car garage between 1,200 and 2,000 square feet. It was that tight. Why that tight? Because I was likely on an airplane, likely in a different country, and my job was to find deals. I could only look at a list that had between 15 and 40 active listings. I looked at that criteria for 3 years, every single day. At about the 6-month mark, I knew that criteria that any other human on the planet, and I never lived in that area. If I knew it that well after 6 months, how well did I know it after a year or 2 years? I could know a deal within seconds. So when you talk about how Olivia and I work together, my job was very simple. Find deals, secure capital. If you want to talk about how we ran our portfolio, how we had approvals, all of that, no freaking clue. She did all the hard stuff. She's amazing, detail-oriented, all of that. I did none of the hard stuff. I just looked at deals every single day, and I got capital, whether it was ours, private, or whatnot. Okay, so here we go. I have 5 things that I want to talk about today. So again, great pain coming, great opportunity, whatever lens that you want on that. There's lots of ways to make money in real estate. Pick your lane. Don't have shiny objects, butterflies, chase somebody else's thing. Find the thing that makes sense to you. For us, we bought everything on the MLS. Call it 98% on the MLS. Why? Because I could do that from my phone, I could do that from my computer. I didn't have, go look up the owners. Great idea. Want to do that now. I didn't have mailers. MLS. So, people say you can't buy on the MLS. You do it long enough, you could find the deal, get the criteria, and stuff is mispriced all the time. Okay? And again, the wealth formula is easier. Next, no one is coming to save you. This is not necessarily a comment for this room because you all get it. You're here. You paid to be here. But damn it, in the world today, there's a lot of people waiting to be saved. And I have a very rude awakening for them. They're not going to be saved. Or if they are saved, it won't be to the level that they are hoping. I don't want to be at this some kind of bare bones level. I want things greater. Number 3, again, as somebody who's been buying real estate for 25 years, I hope you hear this more apparently. I hope you feel this. It is always hard. It is always hard. You think it's hard today? How about you try to buy a freaking house when a bank that has all your freaking money, you've never missed a payment, you make 6 figures a year, you got an 840 credit score, and they tell you to fuck off because you're trying to buy another rental home, and they say that you, the investor, are the problem. I've been there. I had my private banker tell me to basically F off. You think that was fun to hear? It's always hard. The hard just changes. You have to get better. You have to keep going. You have to have the mindset that it's just a pebble in the road. You're going to get up and keep moving forward. 20 some odd years, every year is hard. The hard just changes. Be better. Get in rooms like this, because the story that you hear here, the story you hear there, you can learn from. It may not be the same circumstance, but you will take something and that hard will feel better. Right? So again, keep getting in rooms like this. Here's another thing. As a real estate investor, do you want more or less competition?
Less. More.
Really? Wow, I'm not that guy. I want less competition. Okay, if we can all agree on that, except the guy over here is bigger than all of us, so I probably should lean this way. Go get by the SWAT officer. No protection. What do higher rates do?
Drive people out.
Yeah, it's funny how that works. Higher rates, I want less competition. Here's the truth. And again, I hope you feel the things I'm putting out there. If I had a magic wand, I would make rates 10% today. I want cost of capital to be the same for everybody. Let's make them 10%. What happens? Everybody runs away, they hide, they think they can't do this or that, blah, 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 and I keep writing offers at disrespectful prices that cash flow day one and know that numbers work. Eventually they'll say yes. Again, when you hear the rates go up, think good. Don't think, oh no, the world is over, I'm so scared. Just change your mindset. It is good when rates go up because the little posers go away. And we want less competition. Here's the deal. Most people, maybe not this room, but most people believe you make your money in real estate when you sell. If you've been in the game longer than 3 seconds, you realize you actually make it when you buy. You recognize it when you sell, but you make it when you buy. And that is price or terms. Here's a little fun fact, true story. I was negotiating a single family home a couple of years ago with an owner where the house dialed in was worth $100,000. Dialed in. And believe me, it wasn't dialed in. He wanted $120,000. And I kept following up because I'm a sales guy. You follow up every 2 weeks or whatever. And eventually, I realized that the $120,000 number was important to him. Like it was the only thing. So I called him and said, you know what? What if I gave you $120,000? I'll give you 10% down, which was $12,000, but you have to carry a note for 30 years, fully amortized at 2%. He said yes without batting an eye. This was like 2008, 2009 when rates are 7, 8, 9%. I am convinced to this day, he is telling his buddies on the golf course that he got this stupid Bay Area investor to pay $120,000 for a $100,000 house. I am sure he has gotten drinks off this story, and I'm sitting there going, yeah, you got me. You're good. He's not good. I got a 2% money for 30 years fully amortized. Are you freaking kidding me? It's like printing money, right? So don't ever let them, their price be the thing. Just go back, like Christian would say, and talk terms. Okay, what if I will gladly overpay for a property that I can set the terms on. Why? Because I'm going to do the math. I'm going to figure out what the highest yield is. I don't care what the price is. My goal with everything we buy is to hold forever. So yes, I was dude, I had a negative net worth on that property. Did I care? No, my plan was to hold it forever, and we still have it. Do you think I'm ever paying off that 2% 30-year mortgage? No freaking way. Right? Why would I? So, okay. So again, you make your money when you buy it. Here's the other thing. Where's the pain coming? I've already said this is not the Great Recession. The Great Recession, the pain was in single family, residential lending. Residential lending got stupid. We were giving strippers 98% loans, and they had like The Big Short was real. I was in the middle of it. Do you know that the last house we bought, I signed a blank mortgage application? Seriously, with a licensed mortgage broker. And when I asked him, like, isn't this strange? He goes, don't worry, we have your file. I'm like, I thought it was kind of strange, but that's like, it progressively got more nonsense. It just did. It was crazy. The Big Short was real. So again, realize that this is going on. It's not in residential. Do you know the effective mortgage rate on residential properties today? I just got this from Lance Lambert at Resi Club. 4%. What the heck is an effective mortgage rate, you might ask? Add up all the mortgages in the country, do the math, divide by the denominator, the average is 4%. Do you know what the percent of 30-year fixed rate mortgages are? 97%. There's not pain coming in residential. There'll be some foreclosures and job losses and deaths and blah, 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 but it's not going to be in residential. Where is the pain coming today? Commercial, office, multifamily. Go ahead.
Middle of the city.
Middle of the city, right. Here's the deal. I was at one of these events, 2021, so we're retired a couple of years at this point, in the Silicon Valley. It was about 150 odd people in the room, and I'm the boring one rental at a time guy. They were not interested in hearing from me. They were all wannabe syndicators, right? Because in the Bay Area, if you don't know, there's a lot of stock wealth, right? I bet the average net worth in that room was, just like liquid, was $500,000. So they all had money coming out of their ears. More than half the room were syndicators and never owned a building. How do y'all think that ended up? The foreclosures and pain coming to multifamily office is only started. And in fact, what happened this week with the Fed is going to make it worse. They are finally realizing that no rate cuts are coming. I was on the phone with somebody this morning that's talking about what's going on in the lending space, and lenders have had enough. This whole moratorium and extend, and they're having enough. They're going to start really ramping up pressure and foreclosing because they've got to get this time behind them. And oh, by the way, a lot of those mortgages are at low rates and they can reissue at higher rates. The other thing to realize, and this is what I told the group in San Jose, I told them, I said, I think a lot of you are going to lose all of your money. Because another thing that happened comparing residential with commercial is the average mortgage in 2006 was 98.9% levered. That means the average home buyer had 1% equity. So the loss was the bank's loss. If you guys don't know, the average commercial percentage today is 35% equity. So that means the debt is 65%. The lenders on most deals will come out nearly whole. The equity is toast. Gone. Vamoose. But here's the problem for folks in this room. If you have like LPs, you have folks with stroke, they're probably in some of these deals. They're probably getting capital calls, and a lot of them will never come back. So if you are in the game of getting equity providers, you better up your game, because a lot of people that were in will not come back. When you suffer a 6-figure loss, you're not coming back. You'll go back and do index funds or money market or 5% savings. It's just how the system works. Again, what did I say to open up? The next 18 months are painful. Also, the next 18 months will provide the greatest opportunity. So if you are in the game, if you have the network, you have the stroke, you will be able to buy stuff at a minimum of a 35 to 40% discount. You'll still need stroke. Oh, by the way, the banks aren't doing 65 anymore. They're doing 60, sometimes 55% LTV. So you have to raise more capital. But as a guy that's been in the game 25 years, I also promise you this. There will be another boom. There's always a boom after the bust. And this next boom will be amazing. We were buying single-family homes. We bought a home in Fresno, California, on a street called Pine for $28,000. The lot was worth $50,000. That house today is worth almost $300,000. That's how crazy stuff can get. I fully expect commercial properties to really, really start suffering probably in the next 3 to 6 months, and then it will bleed. The other thing that people don't realize about the last crisis, and I was in it, single family broke first. Multifamily broke years later. It was like a succession of waves. And the reason that happens is the people that own multifamily, they can bleed a little longer. There's a little bit more cash flow. They can just hold on longer. But they break nonetheless. The pressure that is building on some syndicators in other markets is crazy right now. They took on 1 or 2 year bridge debt with 1 year extensions, all interest only. They're getting insurance quotes through the wazoo. Taxes are going up. They freaking overpaid. Do you guys hear about that property in Houston, Texas? There's a property in Houston, Texas, 512 units. Who wouldn't want to say you own 512 units? Be honest. You all would. I know you would. Would you like to own 512 units when you overpaid the next buyer by $25 million? You might have overpaid, right? But shoot, it ain't your money, right? You raised it from all these other suckers. That property in Houston, Texas, I'll be off by a little bit. I think burned $95 million in equity in 11 months. That's hard to do. There's a lot of that going on today. So again, I think the pain that is coming is definitely multifamily. Here's the deal I've learned in 25 years. It's almost always the debt. Why did the Great Recession happen? Debt. Why is the pain coming to commercial? The debt. But again, if you can get in the way, you can get in communication, you can scoop up stuff at ridiculous prices. Anybody here actually ever buy a property directly from a bank? So we bought a property, we bought a foreclosure, little 10-unit building on a street called Diana. And I got a phone call from a bank president. I thought I was being punked. I seriously thought I was being punked. And he goes, I'm so-and-so from so-and-so bank. I see that you own the property at XYZ. Okay? So far, if you're punking me, you got your facts straight. He goes, we happen to own the building next door. And it's because it's our building. I'm like, oh, I know the building. And he goes, we foreclosed on this. We boarded it up. It's a continuous nuisance, blah, 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 blah. We see that you paid X for the building next door. We would like to give you a loan on this building, 100% of the purchase price. Really? I should probably come see you. We go down, we meet it. Dude, Fresno, California gets hot in the summer. This son of a gun is in a 3-piece suit on a Sunday, right? Showing me this building. Anyways, crazy story. I'm like, wow, I can't believe this. The only thing he wanted from us was we had to put $50,000 in his bank to prove that we were going to do repairs. And of course, that's what we do. We are good landlords. We were going to do that anyway. So of course we did that deal, right? Again, what is coming our way could be that good. So what are some words of advice? If you are the king of Indiana, or Gary, Indiana, the whole state, we'll just give you Gary. Yes. What I would be doing if I was Mike in Gary, Indiana, is I would be calling the credit unions, the little 1 and 2 branch stores, letting them know that I'm the king of Gary, Indiana. In my mind, I'm giving you some gold here, man. Come on. I would seriously. There are banks that their charter says they're going to invest in Gary, Indiana. They're little mom and pops, they're little credit unions. Call them now so that you're on some list that when the shit hits the fan in 9 months, they might call you. And oh, by the way, call them back every month and let them know you're still here. It doesn't have to work all the time. It only has to work once. That's the stuff that is coming. So next, I get asked about the real estate, the housing market. So here's the deal. When you hear me say real estate, that's everything. When I talk housing, that's single family. Here's the deal for the real estate agents in the room. I have really bad news for you. You probably got into the game of selling homes when we were doing about 6 to 6.5 million existing home sales. We're not going back there for a decade. We're going to be below 4.3 million transactions this year. Probably, I'd bet anybody in this room $1,000 that we're below 4 or 5 for the next couple of years, existing home sales only. We have historical precedents for this. If you haven't seen the early 80s, go look it up. Here's a trivia question for folks. If you want to win some money with your friends, ask them how many existing home sales were sold in 1978. Have the data, pull it up on your phone. I think the answer is 3.99, so call it 4 million. 1978. What year did we exceed 4 million home sales after 1978? Anybody want to hazard a guess? Come on, just take a guess.
92.
96. So you want to ask how low or how long transaction could stay down? A long fucking time. 1996. You think there was more homes and a bigger population than 1970? Dude, we did a whole decade. We didn't get back to 4 million. So if you're in the game of only being paid on commissions, escrows, inspections, all of that, I suggest becoming a hybrid agent. Add other skills, add other things to the game. So what am I watching for? So again, I'm the buy box guy, right? So what am I looking for? So I still have my criteria. I'm trying to figure out what is the average inventory in my buy box today. You should all know that, right? It should be one of your safe searches. What you should be seeing over the next several months, 6 months or so, is inventory growing. Active listings in most markets will factually be growing going forward. Why? High rates. What else happens when inventory goes up? Days on market is going to grow. There will be some of your buy boxes, some of your cities, some of your states where days on markets doubles, could quite possibly triple by the end of the year. Again, you could look at all of that as doom and gloom. What do I look at it as? Opportunity. This is how the mind should work. Why is 90 days on market a good thing in my book?
Motivated sellers.
It is easier to find motivated sellers. So here's the deal. You live in some town, in some city, you want to sell your home for whatever reason. You think your home is worth, pick a number, 500 grand, 200, whatever, I don't care. You put it on the market, you don't get any interest. What are your two options?
Lower it or take it off.
Lower it or take it off the market. Here's the deal. What did I say earlier? You make your money when you buy, right? If somebody has a house on the market and they want to sell, they're going to take it off the market. I don't deal with wanters. I deal with need. They need to sell. Here's a fun fact for you. 2010, somewhere between 70 and 75% of the active listings in my market were short sales and foreclosures. Oh, by the way, Fresno, California, I sold Norris Drive for almost 300. It retrades at 75. So you want to talk about a 70% haircut? We've been there. I know what that feels like. But if you need to sell in 2010 and you owned your property free and clear and you're competing with active listings that were foreclosures and short sales, guess what? Bad timing, maybe bad karma somewhere in life. You got. You had to compete. That was what was there, right? So you're going to take a real big haircut on price, or to Christian's credit, maybe it's terms, right? Okay, great. If you sell it cash, you can get 80 grand for this. I'm going to give you 120. I'm going to give you a little bit now. I'm going to give you like one payment a year. Get creative with it. This stuff is coming. Slower is better. If you're a buyer, slower is better. If you're in the flipping business, you're kind of on both sides, right? You got to buy a deal and sell a deal. I get it. But in our world, because again, when we buy something, my intention is to hold forever. Slower is better. I am not afraid of writing lots of offers. Here's a fun fact. What was the worst year in the last 5 years to buy on the MLS? What was the worst year? 21. I wrote 100 offers and got 2 freaking counters. No deals. 2021 sucked. Because again, right, boring guy on the MLS, all that. We did 6 deals, wholesale, all that. But again, we want slower. So where's the opportunity today? Where would I think it's going to be? We've already talked about commercial. If you can find a building that was purchased or refinanced in 21 or 22, commercial, especially if it was that 2-year bridge debt's what's going to murder people. Bridge debt, oh, nasty, and those lenders will foreclose quick. If you could find that, that's where opportunity would be. But what about single family? One rental at a time guy, where are you looking? Well, today, first-time home buyers are still buying. So I'm personally not looking at any clean FHA properties. If it's clean, can pass FHA, can pass VA, I'm not interested. Let them have theirs. I am only looking at stuff that's on the market 30 days or more. 30 days or more, non-FHA, non-VA quality. And then I start writing disrespectful offers that allow me to exceed the yield that I expect on my cash. It is that simple. So in closing, the next 18 months will undoubtedly suck, undoubtedly hurt. If it's your first recession, I feel for you. It is clearly not my first recession, so I've been ready for this for a while. It's going to hurt a lot of people. It's also, recessions are just flat out the time where wealth is built. So if you're ready, you got your mind right, you take the opportunities, you don't overpay, you don't get in any debt structures that blow up on you, it could be a lot of fun. So that's what I'm doing. That's our buy box, and I think I came with 6 minutes left to go. 6 minutes of questions, and we'll be here all day. And again, if there are any hard questions, it's for her.
You said something the other day, yesterday, I guess. 4 rentals.
Yeah.
Change your life. Can you
I spend a lot of time with one rental at a time trying to get people's minds right. And again, I was a W-2 employee. I'm not an entrepreneur. In fact, I don't get these joint venture things. It just sounds freaking scary to me. I got one partner and one partner only. She's right over there. People need to understand that only 4 properties could change your life, right? We got in the game in 2001 because I lost all of our money in the stock market. All, 80%, right? Felt like all. I still hurts. It still freaking hurts. But again, I just wanted to get 4 properties. Why? Because I was 30 at the time. I knew by 60, I would have a better retirement than most. 4 properties can do that for you. If you get 4 and you like it, go to 10. This is not about flexing, saying you own 300 when you actually own 3. It's not the game. The game is financial freedom. The game is cash flow. The game is wealth, and that comes with ownership. 4 properties. You get 1 every 2 years will fundamentally change your life. That's what I believe.
Question for you. In regards to commercial.
Yep, he's gonna put a mic by you so we get a recording.
No,
Sorry.
So in regards to commercial, as I drive around and I look at warehouse, industrial, flex, office space, it seems like more and more and more is vacant.
Yeah.
And I listen to you talk about all the time how that space is going to draw a lot of pain. So my question to you is, for the future prospecting thoughts, do you think that demand is going to come back, or do you think those will become repurposed into something different?
Well, I think the great thing about the capitalist system is it will eventually find its equilibrium. I think there are undoubtedly office cores. Think San Francisco, probably Seattle, Portland. I'm just guessing based on similarities. A lot of that's going to be repurposed, and a lot of that will be tax incentives because the footprint and the plate, what they call the plate, it just doesn't work. There'll be some properties that are just torn down and rebuilt. So yeah, there's going to be a lot of repurpose. That's too much of a heavy lift for me. But somebody in San Francisco is going to be a billionaire in 10 years because they're buying Market Street, they're buying Church Street for 80% off. I just don't have that appetite or that stroke or whatever, but somebody will.
Thank you.
Of course.
How do you find capital to capitalize on this opportunity?
So good news is tomorrow I'll be talking a lot about that, but in essence, it's Millennial Mike's Playbook. You have to document your story. I have raised over $10 million 2 different times in my life, and you get a lot more of this tomorrow. In 2010, how about, let's ask this question. How many of you would like to take $50,000 and recycle that same $50,000 20 or 25 times? Great, we're going to talk about that tomorrow. I created at the time, YouTube didn't exist, right? Or if it did, it was in its infancy. I wrote a blog, you can still find the archive, I don't pay for it, so I don't know where it is, called wealthbuildingpro.com. buildingpro.com. What did I do there? I documented what we were doing. I would create a funny name, because I was always worried that people would find the shit I owned. You know, the Gumball house, the Roach house, the whatever. And I would just write a story. And I'm a horrible writer. Did you get a text from me? It probably is misspelled. Why is my YouTube channel one word? Because I can just like type it in and move on. Anyway. So again, wealthbuildingpro.com became a place where we talked about the properties we were buying. We were buying very slowly because it was only our money. By the time I put up my third listing, just documenting what we were doing, people in my network say, hey, I see what you're doing at Wealth Building Pro. I got some money over here. Can I get some of that? I have never asked for a single dollar, and I can raise $10 million tomorrow. Why? Because I matched the time with the deal. So at 2010, we were paying 12% interest. Why? Because I could buy a property. So here's how we did every deal in 2010. My private lenders bought the property, meaning they did the full purchase price. We owned it, right? They're just the note. We would do the repairs because we had day jobs and a portfolio and all of that. And then we would refi later. We were doing burrs and we were documented before it was a thing. We were just moving money around. So that same 50 grand that we had, we recycled 20 to 25 times. Quickly. Because once you have the teams and all of that, the deals were plentiful. So then we retire. Olivia retires in 15, I retire in 18. Folks, if you're ever going to retire financially free, have a plan. Have a plan. The last thing you do is retire February 2nd and you're depressed by February 9th. What a kind of miserable existence that is. That was me. Don't do what I did. I didn't have a plan, didn't have a passion, didn't have an interest. So one of the things I do is I write the book one until at a time. The other thing I do is I decide that I'm going to be flipping slumlord properties into pride of ownership rentals. It's documented in the book. We do that 56 times. We have 6 or 7 figures to play with. I don't want to use it. What do? I don't want to pay 12% because, you know, it's not a long-term hold, right? So we end up paying 6 and 20. We created a partnership or whatever you want to call it. This is all debt. No, when I say it's all debt. 6%. So I paid 6% interest, but I gave them 20% of the upside. Again, full purchase price. We did this 56 times in 27 months. Never made less than 25 grand. So do the math on that. Again, document what you were doing. Be good at it. Never, ever, ever let the private money lose money. Over-communicate. Over-communicate the little text note. I love that. I would do something similar to that. Instead of, hey, your favorite investor did this, you know what I did? I wrote up a monthly summary. This is what we accomplished this month. These were the big expenses. Oh, by the way, our expectation for next month is this. Over-communicate. Document what you were doing, become good at what you are, people will come to you, then over-communicate once you've got their money, and you will have endless amounts of money. I actually created a plaque for everybody that loaned me over $1 million. And there were 5 or 6 people that got those plaques. Reward them. Go ahead.
You said that you never partnered with anybody, but then I just heard you say you had funders coming in with 100%, and they got 25% of the
20, 6 and 20 I called it, yep. It was all the note.
I just heard partnership.
I used the word partner, it's all debt. It's all debt. They got 20% of the upside. I had a real estate lawyer write up the contract, the note, that said it's going to pay 6% interest only every month. The anticipation is this will be a flip. The note expires in a year. He expects to be out in a year. And oh, by the way, at the point of sale, you will get an audited 20% of the upside. It's always been debt. I never had somebody else involved. And it worked really, really well. Just match what you are doing with your audience. Communicate. How did I come up with 6 and 20? Yeah, I talked to the people with the money. And they said, hey, can we do that 12% thing again? I said, no. I'm going to flip this. You wouldn't want it. I was being a good person. I could have taken their 12% money, been in and out of a flip in 4 months, but I would have pissed them off. Because they were thinking it was going to be like last time, where I had it for a year or 18 months. I told them, dude, I'm going to be out of this in 6 months. I know what I'm doing. I've got the team. I've got the reputation. I don't want to pay 12. What if I gave you some of the upside? Oh, what's that look like? Well, I've never done one of these before. Let me get with the real estate attorney. And what if we did half the interest rate? Why did I do 6? Because it was half of 12. That was my genius. And I wanted to give them 20% of the upside. Why? Because 25 was too much and 10% was too low. And millions of dollars flowed in. It's that simple.
So 20% of the net profit.
Correct, audited, right? Purchase price, closing costs, all the repairs, everything was audited down to the penny, and they would get a check to the penny out of escrow. Not from me, escrow, because the note's recorded. I owed escrow that at closing. Beautiful. Match what the money wants. The money is the important. Over communicate, they never lose.
Thank you.
You got it?
That is how a bill becomes a law.